Time to get on board a fundamental voice. Ritu Arora, CIO at Canara HSBC, now joins in live on the show. Ritu, to start off with, the markets have been buoyant over the last few days, but do you think this rally has further legs?
I would expect markets to be volatile and sideways, as I always have, because there are two opposite compelling forces that the market is experiencing. The fundamentals are weighing heavy, while the liquidity momentum is pulling it upwards. And at different points, different forces have prevailed. At this point, of course, clearly it is liquidity-driven momentum. But I don't think, like you said, it would have legs to help it run fast from here. And I would think the wave will be pulling it down. And I would think we should see a consolidation around this level and a little profit booking coming in. And unless we see something extraordinary happening on the policy front, reform funds, announcements, global or domestic, I think for now the market looks reasonably valued.
Right. Ritu, from a longer term perspective, do you think a chance of seeing fresh highs for the markets over the second half of 2012 are possible?
In my views, there are a couple of key things around the globe that need to settle down. One, of course, the most important being Europe. We've had temporary fixes and solutions to the problem, but I would think without fiscal consolidation, the problem cannot be solved. So that is going to be a key to how the market, India or global, go from here. Domestically, we know the fixes. We have problems on multiple fronts, be it on fiscal deficit, be it on inflation. We need to take hikes in diesel price, etc. And these are problems that can be fixed. And even fixing a couple of these will give a possibility of fresh highs for the market to make. Because the moment you start seeing the glass is half full rather than half empty, sentiments support that as well, and markets catch momentum and move ahead of fundamentals.
Ritu, just a couple of days ago, we kicked off the monsoon session of the Parliament. What are the important bills and decisions that you're now watching out for?
I'm hoping that there would be something on diesel price. There would be something on power sector. It's a sector that's waiting for a couple of announcements for a while now. FDI looks a little difficult in this environment, but that could be another welcome announcement.
Right. So now, Ritu, metals are on an upswing today, driven by risk on sentiment in global commodities. How would you approach names like Hindalco and Jindal Steel?
In a liquidity-driven momentum, metals are bound to perform well. We are experiencing a risk on globally. Crude, for example, has also been galloping ahead. So for a while, till liquidity prevails, I would expect metal stocks to do well. But in terms of long-term demand destruction, we are experiencing that, and hence commodities, I would think, should consolidate and stabilize at some point.
Apart from that, Ritu, what's making everyone nervous is those downgrades of the Indian GDP growth forecast by CRISIL, Citi, CLSA, even Moody's. What do you think? Do you think a 6% target will be a little tricky for the government?
I would think 6% GDP is a pretty realistic number to have at this point in time. It could be lower. Some of the fund houses and brokerages, as you mentioned, have actually pulled it down much lower than 6%. But 6%, I think, would be a good number to achieve this year, and I hope it's not going to be lower.
Now, Ritu, you've also mentioned that you are expecting some sort of subsidy correction in diesel. How would you approach OMCs in light of this? Is there upside over there?
I think a lot of that expectation is built into that price. This is a discussion that has been on for last couple of months. It's only been a question of if. So a lot of that is built. So I would not really recommend taking fresh positions there. But are they good stocks to hold on to if you have them in your portfolio? Definitely yes. Because I would continue to believe that it could be a matter of when, but the diesel prices have to be raised considering that crude hasn't cooled off at all, and rupee has also depreciated. So it is a matter of when rather than if. And if you have it in portfolio, yes, one would like to hold on to it.
And finally, Ritu, which are the sectors that you prefer at this juncture?
Sectors, yes, there are a couple of sectors that I still like. Private sector banks, IT, a couple of names in auto anchors still look attractive. Consumption stocks are a good hedge in this environment but come at an expensive price. Pharma falls in the same basket. But these are sectors that I still like to continue to hold and invest in.
Right, Ritu Arora, thanks very much for joining us on the show with your fundamental view on the equity markets. We'll take a very quick break then on Market Sense, but stay with us. We've still got a lot more lined up on the show.